Hi, I'm Cody from Wall Street Breakdown. It is late on Friday night. Our editor and the guy that keeps this ship running, Anthony, is in a crunch to get out for his late night weekend fun. So we are going to combine two earnings calls into one and close this week out the way we start the week with Fire Buddy. Yeah! I'm Cody from Wall Street Breakdown. Today, earnings from Foot Locker and Abercrombie and Fitch. One kind of failed to perform, but one actually was a little better than I thought it was going to be. And to go into the weekend with so much good retail earnings yesterday and today, I'm actually relatively impressed and looking forward to the Christmas season. Foot Locker earnings per share of 87 cents beat the street by 7 cents. Revenues of $1.87 billion beat the street by $40 million, but that's down 1.1% in the revenue department year over year. Comparable store sales are down 3.7%. Sales in total at Foot Locker down 2.3%. Merchandise inventories have gone down at least a little bit, 3.4%, as they're not holding as much inventory. About $1.32 billion in inventory being held at Foot Locker right now. The store count went down. 10 stores down to 3,349 in that quarter. Foot Locker did not have a great quarter. Foot Locker has not been having the greatest quarters for a while. They say they're partnering up with Nike a little bit more to add a little bit more in exclusive content just to Foot Locker. I'm just not entirely sure about this. We talk about clothes all the time and the way clothes specifically fit, and it's nice to go into a retail establishment. We're going to talk about this in Abercrombie and Fitch, and you can try your clothes on and see how your jeans fit, see how your shirt fits. A lot of the times with running shoes, and that's the fact with Foot Locker, a lot of the times with running shoes, if you know your size, you can probably buy your running shoes online. Foot Locker's probably going to end up being one of those companies that in the near future finds themselves sort of on the chopping block or really, really downsized to a point where it's just not going to be near as viable as it once was. I would definitely advise you to talk to your licensed professional financial advisor before jumping into anything resembling Foot Locker, that's for sure. Their earnings call wasn't great, even though they beat on EPS and revs. A lot of numbers were just down. So like they beat on a lot of estimates where people thought the estimates were going to be, things were going to be a lot worse than they were. So I mean, it's not as bad as it could be, but it's definitely not as good as people want it to be. And Foot Locker seems to be trending downwards. I just don't see it picking back up. If they do not have a good holiday season this year, it could be a really, really ugly first quarter for 2018 for Foot Locker's share price. Moving on and continuing with that fire we were talking about, Abercrombie and Fitch. That's where the good-looking guys shop. They do not let me in that store. Abercrombie and Fitch earnings per share of 30 cents. That beat the street by 8 cents. That's a big beat. Revenues of $859 million. That beat the street by $40 million. And that's up year over year on that revenue number. 4.5%, so pretty good growth over at Abercrombie and Fitch. Comparable store sales up 4%. That's much better than what's going on over at Foot Locker and a lot more comparable to what's going on over at the Gap, especially at Old Navy under the Gap. But comparable store sales, the estimate was only 0.3%. So to come out and have a 4% comparable store sales, that is smashing analyst estimates, and that's got to make Abercrombie and Fitch and their shareholders feel really good going into the holiday season. And that, I like to see these retail companies that are finding ways to make things work. The Hollister comparable store sales, with Hollister is also under the Abercrombie and Fitch label. Hollister's comparable store sales were up 8%. So 8% for Hollister, 4% for Abercrombie and Fitch. Big beat on EPS. Revs up 4.5% year over year. Abercrombie and Fitch, the home of the good-looking people wearing khaki, capri, something or other. Nothing I'm ever going to find myself adorned in, but they are definitely doing a really good job of running a solid company over there. Kudos to them for saving what is kind of a tepid earnings call on the front end of this video with Foot Locker, Abercrombie and Fitch. Send us into the weekend with a great earnings call and a lot of good earnings calls this week from retail companies. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, because we're going to be back with financial videos again next week, and we're trying to get your portfolio all buffed up so you can retire. You know what I mean? Click a like for this video. Like for all videos. Like for yourself. We love that you stop by. And comments. We love hearing from you. We want to know what you think. Do you shop at Foot Locker? Do you buy your shoes online? Be honest with us. How about the Abercrombie and Fitch thing? Are you better looking than me? Don't tell me. Lie to me. Just lie to me. and have yourselves an outstanding weekend.